Alibaba stock is down 72.74% off its highs. And here is why I think you're going to regret not buying this stock on the dip. I'm going to talk about that in this video. You're not going to want to miss it. So let's get into it. Starting with Alibaba's absolute explosion in revenue. You look at revenue growth over the last decade, it was less than $10 billion in 2013. It has exploded all the way up to 132.8 billion in its most recent fiscal year. Keep in mind that Alibaba's largest revenue and profit segment is in China, and that economy is just getting underway with the economic reopening. It barely started in January of 2023, and it's ramping up slowly. It's not a quick V-shaped recovery that happened in some parts of the world. Consumers in China are a little more cautious leaving their homes. They've been locked down for several years, longer than anybody else. There's a lot of pent up consumer demand there, and Alibaba stands to benefit as that economy reopens and logistical challenges are eased in terms of shipping and delivery. All of that, it's going to benefit going forward, not all in one year in 2023, but perhaps over several years as that economy, cautiously reopens. Alibaba's operating profit margin over the trailing 12 months has been on its way down, but it looks like it has leveled off. You see the trend here going from 45% operating profit margin all the way down to near 10%, but that has rebounded higher now and hit 11.99%, and it looks like it has bottomed out and it's moving upward. So this was a concern for me for the longest time as I observed this operating profit margin declining, but I was pleased to see it bottom and rebound and recover. Now, this could be a head fake and it could move back down again, another trend lower, although I don't believe that's going to be the case because of what I mentioned earlier, the tailwinds that it's going to experience from the economic reopening in China. So I feel reasonably confident that its operating profit margin declines have stabilized and it's rebounding and it's moving higher. Similarly, the cash flow from operations to sales over the trailing 12 months, which is one of the most important metrics for me when I'm evaluating a stock to buy, it too has been on a downward trend, but it too looks like it bottomed and is recovering or at least stabilizing at a reasonably good level. 17.53% is a good level for a company that's generating over $100 billion in sales, right? So that still generates a very good amount of cash flow from operations. And the downward trend here, you can understand why the stock price has fallen over the last 2 or 3 years, down 73% off its highs, because the operating profit margin was falling over the last couple of years and the cash flow from operations to sales was falling over the last couple of years, not to mention the geopolitical risk associated with companies from China. So all of that combined has led to a massive sell-off in the stock price, which I think is an excellent opportunity to buy the dip here for Alibaba stock. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Especially when I consider this final metric, which is the valuation. Looking at Alibaba's forward price to earnings ratio looking out 1 year is trading at a very inexpensive forward PE of 9.759. This is not trading at the valuation of a growth stock that's been expanding rapidly over the years with several years of runway to go. It's trading like a company that has hit its ceiling and is not going to grow any further and is perhaps on a decline, which I don't think Alibaba is right now. So, for all of those reasons, I think Alibaba stock is one that you can feel good about buying on the dip. In fact, I think you'll regret if you don't buy this stock on the dip 5 years from now, 10 years from now, you will tell yourself, man, I wish I bought Alibaba stock during that massive decline in its valuation. All right, now that isn't to say the stock is not without risk and not without its headwinds. We saw the big declines in its operating margin and the big declines in cash flow from operations to sales. If this stabilization in those two metrics that we're observing over the last few quarters, if that's just a head fake and it's going to take another leg lower, then that's bad news. That's going to be bad news for Alibaba stock. So that's something to look out for. That's a risk, as well as the geopolitical risks associated with companies in China. The Chinese government is not taking a favorable approach to their large tech companies, and so you always want to be cautious with when governments are taking a confrontational stance against business. That's never good news. So that's something to keep an eye out for as well. So keep an eye out for the risks, but overall, the risk versus reward, in my opinion, is in the favor of buyers here of Alibaba. All right, so that's all I've got for this video. Thank you so much for watching. I picked some of my other videos that I think you'll enjoy that are popping up on your screen right now. So please click on one of those and I'll see you over there.